SHEEL is leading the, as we mentioned, fintech fund, which has recently created, right, and which is focused on fintech startups. So tell us a bit more
we started the fund, the 500 FinTech Fund in 2017, and actually have a new fund starting now called Better Tomorrow, and we invest across the spectrum of fintech. And when I say fintech, I think I take a broader view than most on what fintech is. So a lot of companies that other people wouldn't consider fintech, I do. If you have a distribution advantage and a data or underwriting advantage, I think you have what it takes to be a fintech company. So an example of a company is I invested in a shipping and logistics company called Flexport, and people said, "Hey, how do you invest in a shipping and logistics company if you're a fintech investor?" Well, they have everything they need to be a lender and an insurer. They have distribution to their customers. So what they do is they help people get goods from China to the US. And so they have distribution to all those companies. They have underwriting because they see the same user is working with the same supplier over and over again, and they see the frequency of shipments and payments. And then they have collections. They're physically holding inventory. So to me, that's a fintech company. They have a data advantage for underwriting. They have a distribution advantage, and they have a collections advantage. So all they need is capital markets, and they're an efficient lender.
Yeah. Tell a bit about the numbers, like what is the fund and how it is connected to the accelerator that we actually talked about yesterday, right? Marvin had this nice presentation about the accelerator. So is it the part of the accelerator? Is it a separate initiative, or how is it?
It's a separate fund, but we work closely together with the accelerator. So we have fintech companies in the accelerator as well. And for the accelerator companies, we're typically the first money into those companies. And we run a program where we bring companies in, help them, work with them very closely for 4 months, and then invest in the future rounds as well.
Okay, and you have so many companies in portfolio already. Can you tell us a bit more about what are the specific directions that are trending in your portfolio? What type of companies you invested in?
Sure. Yeah. So I guess at first level, we break it down into disruptors versus enablers. So disruptors are companies that are building new consumer brands. Enablers are those helping other companies, do what they need to do. It could be behind the scenes. Although, increasingly some of the enablers actually are building brands themselves. So an example would be Stripe. Stripe is not something that really consumers use, but they've built a brand amongst startups. And I think many of these new companies will build brands themselves, but amongst startups. So the enablers can build brands as well. So that's the first breakdown. And then within the disruptors, there's personal finance management, wealth management, insurance, lending. Those are broadly the categories. I've done the most in insurance. A couple of direct-to-consumer brands that are doing very well. One is a homeowners insurance company called Kin. One is a auto insurer called Clear Cover. Both are doing really well. In the personal finance management, I'm an investor and board member in a company called Albert. And their mission is to automate a person's financial life. So right now, the way it works is you can text message any question that you have to them, and they'll answer it. But they also, and that's human powered with AI that answers the questions. But they also will automate your finances for you. So they know everything about you, and they'll say, "Hey, you're paying really high interest here. We automatically got you a better loan. Just click here and you'll get a better deal." And I think this is what I'm really excited about in finance, is truly automated finance. Most people, especially in the US and globally, have really poor financial literacy. So they don't know what to do with their finances. And many people think the solution is education. I think education is a part of the solution, but now we have technology. So the solution can be technology does it for you. And that's something I'm really excited to see in the future.
This is a global fund, right?
Yeah, we invest globally.
So Can you tell us briefly what is the geography of the companies that you invest in? This is especially interesting for the audience, I'm sure, because Tbilisi, it's the first time that Startup Grind and this kind of event is happening in this region.
Yeah.
And we have the startups actually mostly from this area. So it's interesting what's the geography of your activities and if there's room for our region.
Yeah, absolutely. So I'll invest anywhere. Now, I'm based in San Francisco, so it tends to be the case that the majority of my investments are in the US. About 70% of my investments are in the US. But I've done quite a bit in Africa, Southeast Asia. Have not done much in this region. I would say if you're starting a fintech company in Georgia, one challenge is simply the size of the market. So I'd need to see something that indicates you're thinking beyond this market, because we invest in companies that can grow to be huge, can grow to be, multi-billion-dollar companies ideally. And I think Georgia is an okay place to start and do some testing, but I think you very quickly would need to move beyond.
So since we started talking about the specific characteristics of Georgian market, let's talk about open banking as well.
Yeah.
So in fintech area, this is very important, right? The startups are mainly connected to financial services, the banks, and I'm sure most of the companies that you invested in are serving the markets where you can integrate to banks easily. What do you see as, you're coming from the experience where you have seen these open banking standards in many countries, and Georgia is quite on the way of following these regulations and following this trend and standards. So what's your perspective? I mean, what was the biggest effect that open banking brought to these countries who moved on this standard, and maybe also to talk about the challenges?
Yeah, well, I think it's relatively new. And the perspective I have the most is in the US, where the banks for years have been fighting against it. It started out with these companies. The first one was called Yodlee. They were screen scraping. So they were running scripts to let you log into the bank account and get your bank information. And now Plaid is a company doing something similar, much more successful. And the banks for years were fighting against these companies. And now some of them have started to embrace it a little bit more. And the reason that the banks fight against it is very clear. If you give a user access to their information through a third party, then you may not be the front end that they use for banking anymore. And if you're not the front end, they can replace that back end very simply. So, it's clear why many banks don't want it. So actually, I would ask you, coming from bank, why do you embrace open banking?
Banks are serving the service, which is actually quite demanding, right? I mean, this is one of the top applications that users are having. And we talked about Glovo and all the other companies yesterday, and we mentioned so many companies today. And these companies make users more demanding, right? And they want something more innovative, better UX, yet they need more beautiful applications, right? And as you said, banks are following very slowly, right? And there are anyways fintech companies doing new solutions, which are faster, which are more innovative in many cases, right?
Yeah.
And why we, in our case, started this initiative of bringing open banking in Georgia is that we believe we can be more successful if we partner with them, because in the end, both of the parties will be in benefit, right? Because,
that's a very astute way to think about it, and most of the incumbents don't think about it that way.
What's the role of banks actually in your portfolio? I've seen you invested in Simple, right? The fintech application, which was acquired by BBVA. What's the role that banks have in your business?
So banks are. It's funny because many people think of fintechs as disrupting the banks, which is true. But in disrupting the banks, they usually need to partner with the banks. So most of the successful fintech companies, or the consumer ones that grow, have a banking partner on the back end. And the thing is, they're disrupting the large banks, but partnering with the smaller banks is how it tends to work. But most of my companies, in a related space, have a banking partner.
As someone who helps them to enter the market, or as someone who is investing in them, or someone who is acquiring them, or it happens every year?
Yeah, it happens in all ways. Usually it starts with partnership, and it could be that I have a savings app, and behind the scenes, I have a high yield savings offering. Behind the scenes, there's a bank that's actually doing that because I can't do that, and that's a typical way to start. It can move into investment. I've had companies invested in by BBVA, Amex, and Citi Ventures, so that's happens frequently. And then it also happens in acquisition, like you said, BBVA. BBVA was an LP in our fund, met Simple and in our office, and then acquired them. It was a $180 million acquisition.
Okay, so since we have some startups from FinTech area in the audience who are, I'm sure, interested in how to approach to the fund, please tell us a bit more about what stage you're looking for, and what the company's on which stage, and what's the? We talked about the area, right? You're looking for very different directions, but what type of companies you're looking at, and what's the main criteria that you focus on?
Sure. So I tend to be among the earliest investors in a company. Now, I will say, in markets that I don't know as well, I end up moving a little bit later stage because it's hard for me to be the first investor in a company in a market that I don't know. If there is some traction proof points that have already happened, then I can invest. But typically, I'm investing in rounds of $3 million and below, $3 million US dollars and below. And in terms of what I'm looking for, I'm open. At the earliest stage that I invest, what matters more than anything else is the team. I'm looking for a team, a leader that I can get behind, a leader that can clearly articulate their vision to me. And if they can't articulate their vision clearly to me, they won't be able to articulate it to future investors, employees, and customers. So that's the most important thing I look for in a CEO. And then, I tend to look for a technical team as well. Not always the case. It doesn't necessarily always matter, but oftentimes I'm also looking for a technical team around them.
So it might be a company with a business background in the founders, but they might not have some technical team, right? But this cannot be on idea stage, right? They should have some traction, as you mentioned, right?
I'd say I have definitely invested in idea stage companies as well. But in the US, tends to be with entrepreneurs that I know before, versus in markets I don't know as well. I typically want to see more traction.
Okay.
I think like the way to think about it is the things that matter are team, number one, market size and opportunity, probably number two, some technology advantage matters to me as maybe number three, and traction are sort of the things that matter. And actually, you can remember them in T's. You can remember team, total addressable market, traction, technology. You can say trends, like is this the right time for this thing? And then terms, what are the terms of the deal? Those are the things that roughly matter to me. And
the question which is somehow related to this, so considering these criteria, so what's your experience? What are the main mistakes that startups are making when coming to you? So this would be something to consider after the panel when people come to you and talk to you in the hall.
Yeah, there's so many of them. But I think one thing is be very concise. So try to say something to me. Practice what you're going to say, not to me, but to anybody. And try to think of something where, like, in a few lines, you can attract my attention and explain to me clearly what you do. And I think you should really practice that. That's where this like X for Y thing came about. Like we're like, we're like Raisin for this market, or we're like Uber for this. That's where that sort of came along. And some people don't like it. I actually like it. It helps me understand quickly what you do.
So to approach you, to practice before talk to you, and to tell everything in a simple way, right? To be specific.
Yeah, to be specific and simple, and then tell me what you're looking for. And then, typically I recommend in those few lines, try to think about what makes you special. You're trying to, and this isn't just for me, this is for any investor, anybody you talk to, try to attract their attention, because a lot of people, especially for VCs, a lot of people are coming for our attention. So try to think of ways that you can attract it very quickly.
Okay. Let's talk a bit more about the region. Did you have any experience in talking to companies to this area? I mean, the Caucasus and neighboring countries.
No,
it's
actually,
your first time actually coming here, and
yeah, it's my
looking
first
for
time
startups?
here, and so far I'm really enjoying it and loving it.
Do you think there would be any advantages or challenges for this region?
I think the challenge is simple. It's this market is small. You can expand beyond this market into the other markets in the region. Still relatively small, and you don't have the advantage that some other European countries have, and that they're a small market, but in the EU, which allows for more mobility. That's one challenge. Advantage is if you're building something global, the costs are very low here. Yeah. And I can't speak to the talent here, but folks that I've met seem very sharp. I have heard that their technology is not necessarily like the number one strong suit of Georgia, but in terms of like developers. But this, could be a very good place to put some portions of the team.
And so maybe it's a bit technical question, but what are the ways to approach to the fund? So if there's a company around who wants to approach to the 500 FinTech Fund, is it the online procedure? Should they meet you somewhere, or how is it happening? How do you?
Yeah, for 500, it's pretty easy. There's an application process that you can apply on the website. And all of those do get looked at. So that's pretty easy. Of course, you can approach me as well. I'm here.
Yeah. And this is why these kind of events are very helpful, right? Because if someone told me like 1 or 2 years ago, even 1 or 2 years ago, that SHEEL or someone from 500 Startups would be in Tbilisi and Rustaveli Theater, and I would be interviewing him, talking about the regional startup topics, I would not believe. And thanks to Startup Grind team, that actually this is happening, right? And this is quite good chance for startups to actually talk to you, get feedback, and to see how they can get to you. Because it really, I really felt that some companies thought that it's really, let's say, science fiction, that they can get to all these accelerators and funds that are in Silicon Valley and now in globally, right? And it's good to have you here and actually talking to the audience and sharing your thoughts.
Yeah. Absolutely. Glad to be here. I'm looking for more reasons to come back to the region. So make it happen.
I hope you will have more startups to talk to. So reason to come back.
Absolutely.
Okay. Thank you.